Today we're just going to look at candlestick anatomy, but before then, I need to say a few things about video you guys have watched. So just proper introduction. Some of you are familiar with me already, and you guys already know my name. And like I said, Forex, according to the video that you guys have watched before now, is nothing but an acronym for the word foreign exchange. That is what Forex is. It's just an acronym for foreign exchange. And what do I mean by foreign exchange? And now you have to look at the financial market at large. Now, when you talk about the financial market, you're talking about a system that connects the whole world, like the global world, in terms of economic activities. The system that connects the whole world together. So in terms of the economic activity is what we refer to as the financial market. And then when we are talking about the financial market, they are broadly divided into four. For those who have watched the video, if you have not, the video is actually still available in the channel. You can always go back to refer to it. It's just to broaden your understanding about it. So we have the likes of currency market, we have derivative market, we have currency, and then we have what is it called? We have capital market as well. So our major concern is the currency market. And the currency market, we have both cryptocurrencies and then the foreign exchange market, which is the forex itself. So what do you do as a forex trader? When we're in our various schools as we are growing, probably in your GSS classes or thereabout, we are told that trading is the art of buying and selling of goods and services, right? If you do, I can remember I did business study in my junior classes in school. So it's the art of buying and selling of goods and services. In a similar way, when you talk about forex, your forex trading per se, you're talking about, because remember I said the word forex come from what foreign exchange. And what do I mean by foreign exchange? When you look at your own country, the currency you spend or the currency you're familiar with is naira. All right. Now, when you go to other countries like the US or Canada, they also have their own base currency, which is actually US uses US dollar. Canada, I think they use what is it called? The UK uses euro, and then we have the likes of pounds, and many countries have their own base currency that they use as a means of exchange. But globally, all of these currencies have a way of interacting with one another because there is a need for international relationship. There is a need for countries like Nigeria to relate with the US country. There's a need for country like Australia to relate with Nigeria. There's a need for country. So this because of these international trades, it's important that this country find a way to relate together, and that is the reason why the system is possible for international transaction. So it's very good that you have a base understanding of how these things works. So having said that, bringing it down to forex trading in general, it is the art of buying and selling, either buying or selling the currencies of different countries. All right, because we have if you want to travel from Nigeria to the US, of course what you will have with you is nothing but naira as your currency. But when you get to the airport, or probably when you get to the embassy, there will be a need for you to convert that your currency, which is in naira, to the US dollar. Okay, there is a need for you to do that. The reason is because you cannot spend naira in the US. So because of that, there is an exchange rate that will tell you that okay, one naira is equal to this or $1 is equal to this. So because of this exchange rate, whoever is involved in this is already participating in forex, and that is why forex is not a gambling game. Forex is not bet Nigeria or what. It's not a kind of bet or gamble that it's something that have come to stay. It's not something that I'm sure you guys must have heard of Ponzi scheme or some of these things that come out after some time they tell you that it have crashed or something. Forex is nothing of such. As long as there is still interaction between countries in terms of economic activities and all, forex will remain the same. So that is that about forex. Then when you look at, I've given a definition of what forex is. Like I said, try as much as you can to jot down things so that on your own or at the end of the class, you guys can unmute your mic and then ask your question. But for now, just make sure you're paying attention and then you're writing down something. So another thing I want to say is the volume of money in the forex market. The volume of money in the forex market is about 7.8 or 7.6 thereabouts, roughly approximate value or $7 trillion that is traded in the forex market per day. So that is a whole lot of money. When you check, how do you know that this money is a whole lot of money? It's not about the figure. You have to compare it in relationship with the populations of the world. The population of the world, I don't think we are up to 1 trillion, right? We are not up to a trillion in terms of population. Now, if a day the volume of money is more than $6 trillion in a day, that means that the volume of money that is traded in the forex market can actually save everybody round. Like it can actually go round for the if they share that money for every individuals according to statistic, that money will go round. And that is the reason why, and it's every day by day. It's not like it's maybe traded in a week or thereabout. Every single day you wake up, you sleep and wake up, that huge amount of money is pumped into the forex market, and that is the reason why forex can never go down. So, having said all of this, how do you or what are you here for? You are here because you want to learn the art of buying and selling. You want to learn the business of forex trading. You want to learn what to do to actually benefit from these opportunities that the market has presented to us. But you know, for you to learn these things, you have to be prepared to put in the work. I've said that before now. There is no two ways about it. It is hard, but that is the only way. There is no shortcut. You have to be ready. You are going to meet people that are conflicting with your ideas. You are going to meet people that are saying things that are not in line with what you're doing. You are going to meet people that will kick against your decision of becoming a forex trader because they are going to tell you it is hard. Yes, of course it is. They are going to tell you are going to lose your money. They are going to tell you all sorts of discouraging activity. But I keep saying that when a dream is big enough, the odd does not matter. It doesn't matter what people say. It doesn't matter what is your life. You are the one that know what you want. Everybody seek to become financially free. So you have to make sure that you are not carried away by what people are saying, and you have to tell yourself that I can do it, and then you just have to put up the work. So for you to be able to for you to be able to understand the forex market or the forex industry, you really need to know the business of it. And how do you know the business of it? You have to learn how the forex world work. You have to learn how to buy and how to sell, like when to buy and when to sell. You also have to learn You also have to learn the language that the forex market speaks, because when you go to a new environment, for you to be able to interact with such an environment, you really need to understand what is going on in that environment. And that is the reason why we are going to discuss about candlestick anatomy. All right, because the candlestick is the language of the market. So for you to understand what the forex industry is saying, you really need to understand what the candles are actually saying. It's very, very important. So having said that, when it comes to learning of forex, there are three major things that you really need to pay attention to. Number one is is the technical know-how, like it is popularly referred to as technical analysis. All right, you really need to have the knowledge of technical analysis. You really need to have the knowledge of risk management, and then psychology. So what we are focusing on right now is what? Technical analysis. Okay, so the part of technical analysis we want to look at is nothing but what? Candlestick. Now, what is technical analysis? Technical analysis is a way of studying historical price level so that you can be able to predict future price, or you can be able to predict what the market will do next. Just to put it in a layman language, in technical analysis, what you do is you read the footprint of the market, what the market has been doing before now, then you study it. From your study, you can now conclude or deduce that, okay, because of what this market have done in this way, I believe that this market is going to do this next. So that is what you do in technical analysis. Now, there are basically three types of technical analysis, or okay, we have fundamental analysis, we have sentimental analysis, and then also we have Hmm, I can't remember the last one, but we have normal analysis like reading price action. Yes, we have price action. Okay, we have price action. So what we are dealing with right now is technical analysis. Well, as you are looking at my screen right now, for me to be able to predict or tell that the market is going to do according to what you're seeing on my screen, this is because I have already studied what price has been doing for a particular period of time. You are seeing some drawings that I'm doing on my chart, and then I am able to conclude that, okay, because of what I have seen or because of what price is doing, I believe that price is going to do one or two things, and you can see some of it playing out on the screen. So that is that about about what we have for the day. So let me open a new tab. Let me open a new tab. So now we are going to properly look at candlestick. Okay, like I said, candlesticks are the language of the market. They When two or more candles combine together, they form patterns, and that is why when you check here, these are combination of different candles. When different candles come together, they form a particular pattern. When they as they increase, they form trend. It is candlestick that form a pattern in the market. Also, it is candlestick that form market trend. As we continue, you are going to understand what market trend is, but our major focus right now is candlestick. So I'm just going to run you guys through on how these candles are formed. Basically, there are two types of candles. You have the bearish candle. We have the bearish candle, and we have the bullish candle. So these are ways you identify these candles by their colors. So the red one is also, although there are some platforms that may use black and white, doesn't matter the convention, but just know that technically we have two types of candles. We have the bearish candle and we have the bullish candle. Now the bearish candle has an open price here. Most of the time it always comes with a wick. Allow me to put the wick. Okay, so this is how the bearish candle looks like. So we have, here is the opening of the candle. So this is the opening of the candle, just this place. I think I'll just have to use my mouse. There's no need for it. So this is the opening of the candle here. The candle open around this region that you're seeing. What happened is that you need to understand that whatever is happening in the forex market is as a result of interaction between buyers and seller. So we refer to buyers as the bears. Sorry, we refer to buyers as the bull, and that is where the word bullish come from. Okay, that is where the word bullish come from. All right, and then we refer to this is a bullish candle. Then we refer to seller as the bear, and that is where the word bearish come from. Okay, so we refer to this candle, as a bear candle. So what happens is that when this candle opens from this particular region, as you can see here, the reason for this wick you guys are seeing, this tiny thing you are seeing, it is called a wick or a rejection. The reason for this rejection is because immediately the candles open. Okay, I think I have to label this candle. We have the open here. We have open. We have open. We have open. This is the open of the candle. So this is the open of the candle. This particular point is called a high. This particular point is called a high. It's called a high. We have the low. This is the low, and this is the close. That is the close of the candle. So that is the close of the candle. All right. Let me move this one from here so that you guys will understand. So I believe you guys can see what I have drawn. This is a bearish candle. This is the open of the candle. This is the close of the candle. This is the high and this is the low. What it means is that this high means this is the highest point this candle rose to, or the highest price level of this particular candle at this particular time frame. Okay, then this is the lowest point of this particular candle at this particular time frame, and then this is the starting point of the candle. This is where the candle starts its formation, and this is how it closes. And I was trying to explain to you guys that what happened is immediately the market opened at this particular price level, the buyers came in and took the market to this particular point, which is known as the high. Immediately it opens from here, the buyers, which are the bulls, came in and pushed price to this high point here. But after they push price to this high point, the bears, which are the sellers, came in and begin to push price further. And as they push price back to this particular opening price, is the reason why we have this tiny wick. This tiny line, which I call wick or rejection, is as a result of their is the mark, or how will I put it, like the footprint of their battle. Okay, then the seller begins to push price all the way to this particular lowest point. But when they get to this particular lowest point, the bulls or the buyers as well came in and said, no, we cannot stop. I mean, we cannot continue looking at these people to keep on pushing this price to this particular to the downside. So they also stepped in and they began to push the price to the upward direction. But at some point, they exhausted their energy and they could no longer push price further. And as a result of that, the market closes at this particular price level. So in a very similar way, the bull has an open price of, we have, they also have wick. I'm just giving you a general, a more general, a more general view of how a candle looks like. Okay, so this is how the bullish candle looks like. Here, the opening of the candle is here. The opening of this candle is here. Okay, I can just type it as open. All right. We also have the low of the candle like this. This is the low of the candle. This is the low of the candle. Then we have the high as well. The high and the low remain the same. This is the high. This is the high. And then we have the close of this candle. This is where the candle closed at. We have the close of the candle. Okay. So this is the close of the candle. So I believe you guys can understand better by means of this diagram. So, and all of this is what we refer to as the body of the candle. Okay, you can see my mouse. This is what we refer to as the body of the candle. I hope you guys can hear me. Can you guys hear me? Can you guys hear me? Can you guys hear me? Okay, so like I said, this is the body of the candles. All right, so the same interpretation here is the same thing that happens here is what is happening here, just that they are now like in the opposite direction. Remember here I said when the candles open at this particular level, when the candle opened at this particular level, the buyers came and pushed price to this level before the seller came in and pushed it all the way down. And then the buyer came up here to push it to this particular level and the candle closes at this particular price level. In a similar way, This is the body of the candle, and this is the opening of the candle. Immediately the candle opened at this point, the sellers, which are the bears, came in and pushed price to this low point. All right, but the buyers as well came in and they were like, no, we cannot continue looking at them, and they begin to push price further. They push this price to as high as this particular level, which is called the high of the candle. And the sellers were came in and was like, we cannot just keep quiet and allow them to keep on pushing up this price. And then they also tried their best to push the price to this particular level. But at this point, they exhausted themselves and they could no longer do anything. And that is why the candle closes in the favor of the bulls. And so we call it a bullish candle. So that is that about that. When two candles come together, they form patterns. All right. The two candles come together, they form patterns. And I'm just going to list out some candlestick patterns that you have to, I'm going to show you on the chart, okay? So, like I said, I'm recording this so that you can actually make reference to it at any point you need it. So, when you talk about candlestick pattern, we have the like of bullish engulfing candle, bullish engulfing, bullish engulfing. We have bearish, we have bearish engulfing, we have bearish engulfing, we have rejection can, we have doji, we have evening star, we have evening star, we have morning star, we have morning star, we have morning star, we have tweezer top, and tweezer bottom. Sorry, the spelling of this guy is wrong. Okay. Yeah, you have tweezer top and tweezer bottom. Okay, so these are different type of candles that we have. Okay, they are still, so I'm just going to put etc. Okay, there are many of them. These are just a few of them that I've listed here. Okay, these are different type of candles that we have. Now, when we talk about bullish engulfing candle, please make sure you're paying attention. Bullish engulfing candle is a two candlestick pattern that tells you when a market wants to start going in the upward direction. I'll take it again. Bullish engulfing candle is a two candlestick pattern that tells you when the market wants to start going in the upward direction. What do I mean by two candles? It means that they comprise of two candles. For instance, this is an example of this is how it looks like, and you have something like this. But at this point, okay, this is how a bullish engulfing candle looks like. All right. Like I said, there are two candlestick patterns. The first one being a bear candle, and the second one being a bullish candle. And the bullish candle, please, if you're just coming in, kindly turn off your mic, okay, please. And the bullish candle completely engulf the other candle. Okay, if you see, if you check very well, you realize that So I'm saying that the bear candle, the bullish candle completely engulf the bodies of the bear candle. Okay, so that's why they call it bullish engulfing candle. But in the case of bearish engulfing candle, what the opposite is the case. This time around we have something like this. We have something like this. Okay, so this is an example. So this is an example of a bearish engulfing candle. Okay, this is an example of a bearish engulfing candle. I told you that what bullish engulfing candle means is that it gives you a sign that the market wants to start going in the upward direction. But in terms of bearish engulfing candle, it gives you sign that the market wants to start going in the downward direction. So as a trader, whenever you see a bearish engulfing candle on a particular market trend, what that is telling you is that the market wants to start going in the downward direction. And whenever you see a bullish engulfing candle, it's telling you that the market wants to start going in the upward direction. So the next candle we have before us is doji. Okay, the next candle we have before us is what? Doji, right? Doji, they are of different form. The like of dojis, most of them, or collectively, we call them rejection candles. All right, those are the ones that has just those long wick. You will see something like this on your charts. When you are looking at the charts, you will see something that will look like this. You see something that looks like this with a very long wick, or you see it in this format. So this is what we call a hammer. This is what we call a hammer. Okay, this is what we call a hammer. This is what we call a hammer, and this is what we call inverted hammer. Inverted hammer or shooting star Okay, the name is just too long, but this is the name. You can see inverted hammer or shooting star. That is what that candle represents. All right. So just make sure that you pay attention to them. So I believe you guys can see it clearly. So this particular candle is called, but you also have one that look like just cross. It's just something like this. So all of these candle you're seeing me I'm drawing right now, they are the likes of doji candle. You have something like this, and then probably a very tiny body. So you have some that looks like this. Sometimes it could be a green. This can be a green candle or irrespective, it doesn't matter, but this is just what it means. So what this hammer is telling you is that when you see a hammer in a particular market trend, it's showing you the presence of a bullish. It's telling you it's showing you the presence of buyers, or the power of what, the bulls, because the market actually came down to this particular level, to this particular low here. But because of the power of the bull, they were able to push this market to the upward direction until this particular level. So that is a sign. If you see it on a downtrend, a market that is trending toward the downside, and you see this thing at a particular level, is telling you, is a sign to tell you that the market may likely start going to the upward direction. Then for this inverted hammer, you will normally see them where you, as a trader, where you want to look for inverted hammer is at a resistance level. Okay, when we get support and resistance, you understand what I mean by resistance level. When you want to see this doji, sorry, when you want to see this inverted hammer or shooting star, is at a resistance level, or a market that is trending towards the upward direction. The moment you see a market going up and suddenly it forms this type of candlestick, is an indication that what, this market want to start reversing and start going to the downward direction. So these are just things that traders put in place before making decisions in the market. And then whenever you see a candle that is like this, whenever you see a candle that is like this, you see a candle that looks like cross. There are different type of doji candle. You see the one that looks like just cross like this. Whenever you see a candle that looks like this, what it's telling you is that there is no one winning this battle. Like, it's an indecision candle. They call it indecision candle. All right. So doji, sometimes they call it indecision candle or rejection candle. What this particular one means is that you can't tell who is winning this battle. It you cannot say that either the buyer is winning or the bull is winning. Sorry, either the buyer is winning or the sellers are winning. So you can't tell. Okay, it's an indecision candle. So as a trader, when you see this type of candle, how do you position yourself? It's an indecision candle, meaning you cannot decide who is winning, right? So what you need to do is now have to wait for a particular um, another candle to be formed before you can now make your conclusion that, oh, if the next candle that form is bearish, it means that the bears have won the battle. If the next candle that form is bullish, it means that the bulls have won the battle. So what another way you can look at it is like, maybe you are in a round, or you're watching a match, right? Probably, let me use football as a case study. After the first half, after the first half, what happened is that the both team are both scoring 1-1 goals, right? That is, and someone asks you who is winning this game. You can't decide that. It's an indecision because both teams are scoring a goal. The first team scored a goal, the second one also scored a goal, and that is just for the first half. So that is the interpretation of this candle. Now, how do you now determine what to do next? That is why you have to now wait for the next candle to form. You waiting for the next candle to form is like waiting for the second half for you to decide which team is going to emerge as a winner, right? So that is just that. I hope you guys grabbed everything that I've said. So I will just show you some of these candles that sorry, I'll just show you some of these candles that I have listed now, and then you guys, and then okay. So once I'm able to show you, I'm just leaving it for you guys to probably see. So I believe you guys must have um taking down some things. So I will just show you how where you can like just to identify some of these candles on the chart. Now look at this candle here. Look at this candle, the middle one. That is an example of what? Inverted hammer. This particular one you're seeing here, that is an example of what? Inverted hammer. And what did I tell you that inverted hammer does? When you see that the market is going up and you immediately identify an inverted hammer, is a sign telling you that the market might want to start going to the downward direction. And what happened? Immediately this inverted hammer is formed, you see that the market start going down. This is another inverted hammer here. As you can see, after this inverted hammer is formed, the market start going down. If you look at this particular level again, there is another one here. Okay, I believe you guys can see it clearly. So immediately after this particular candle is formed, you see that the market starts retracing to the downside. So these are just that I've shown you inverted hammer. So let me see if I can get hammer and then bullish engulfing candles. Okay, this is an example of a bullish engulfing candle. This particular candles. I need to zoom in so that you can see clearly. Okay, look at this first two candle. This is an example of what? Bullish engulfing. Like I showed you guys here. Like I showed you guys here, when we talk about, oh, I've changed the narrative. Remember when I was explaining to you guys, I told you that bullish engulfing candles normally looks like this. Okay, I told you that bullish engulfing candle normally looks like this, right? So you can actually see it here. This is an example of a bullish engulfing candle. And I told you that what it means is that where you want to say that when you see that the market is coming to the downward direction, just like you can see that the market is coming down, and then all of a sudden you're able to identify a bullish engulfing candle, the next thing you expect as a trader is that there is higher probability that the market will start trending to the upside. So it's a kind of reversal candlestick pattern. Okay, and what happened after this bullish engulfing candle is formed? You see the market rallying to the upward side. Also, if you look at this particular candle, here, this particular one here, let me circle it so that you can see this particular one here. If you look at this particular candle, it looks like this. It looks like this candle, right? It looks like this candle that you're seeing right now. It's just that if I change the color right now to probably green, okay, I believe you guys can see it clearly. You can see that it's almost is now descending, right? So this remember I told you that most of the time those candles are indecision candle, and when you see an indecision candle as a trader, what you want to do is you cannot take a decision yet. You have to be patient enough. That is why I use football analogy to describe that you have to wait for the next candle to be formed and see what happens. And you see, when you see this indecision candle, you now wait for the next candle to form, and the next candle ended in the favor of the bulls. And what that tells you, it means that after the full match, the winner is what? Bullish candles, okay? Or the bulls or the buyers. The buyers are the winners of this battle. So as a trader, what you want to do is you want to buy. Once you have identify this particular candle. Okay, so the next candle I want us to see, you can see this is an example of inverted hammer as well. You can see immediately after this inverted hammer, what happened? The market started trending to the downward side. So I want to show you now what a bearish engulfing candle looks like. Okay, this is an example of a bearish engulfing candle. This is an example of a bearish engulfing candle. These two candles you're seeing here, that is an example of a bearish engulfing candle. You can see the first one being a green candle and the second one being a red candle. The green one is what? The bulls, and the green one represents a bullish momentum, while the red one represents a bearish momentum. And what happened is that after this after this particular after this particular bearish engulfing candle is formed, remember what I told you when I was explaining to you that you want to see bearish engulfing candle in a market that is probably trending to the upward direction. It will, once you see it, it's a sign telling you that the market wants to start trending to the downward direction. Look at this particular beautiful bearish engulfing candles, right? Can you see it? This green candle, this is a green candle, right? And then look at how powerful this candle. This particular candle is called Marabozo. Okay, these are power candle. They call them power candle. They show the presence of a particular they show the presence of either the buyers or the sellers. So this particular candle tells you that sellers are aggressively in control of this market, because look at how this particular candle covers one, two, three, four. Okay, look at how just one candle cover about four candles. So this is how you can identify, this is how to spot your candles, and I believe that you guys have learned something really great. I'm going to also drop this video. Don't assume anything. Continuation brings perfection. Make sure you go through this video at your own time, because by the time you start trading, remember you're going to be trading with your capital, and the aim is you protect your capital and you try to make profits. So make sure you understand these things. These are the concepts you're going to put together to ensure that you are profitable in the market. So I hope you guys have understood everything I've said so far. I'm just going to give room for question and answer. Okay, so if you have any question right now, it's time for you to um unmute your mic and ask your question. Is there any question? Okay, the question he asks is, how do you identify the type of candles that will tell you that the market wants to start selling? So I'm just rephrasing what he said so that you guys can pick it. And in relation to hammer, he was now asking like which type will tell you that the market wants to start selling. And I now give him the example of candles, which by drawing this inverted hammer, this is an inverted hammer or shooting star. The name doesn't matter. It's just for you to understand what they interpret in the market. That once you see it in a trending market, a market that is trending to the upward direction, it's a sign that the market wants to reverse from going up to, or from going to the upward direction to the downward direction. So that is the answer to his question. And in the absence of no question, we call it a day and we continue in our next class. So God bless you. Thank you for attending the class, and don't forget to try as much as you can to go over this video once I drop it for you guys, so that you can have a full understanding of what I have said. Don't assume that you now know it. Practice make perfect. Okay, so that is that about that. God bless you for attending. See you guys in our next class. Bye.